Hi there, good afternoon. You've tuned into ET now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you, Vinny. And markets, yes, definitely declining in today's trading session. Right now, we've recovered a tad bit from the day's lowest point, approximately 100 odd points that we've recovered from the day's low that is coming in for the benchmark indices. We've surpassed the 17,650 mark on an intraday basis. Remember, when we had opened, the Nifty slipped below that 17,600 levels as well. It's the IT index that's under immense pressure in today's trading session, and I'm sure if you've been tuned in to ET now since morning, you'll know that Infosys is the one that is actually putting the pressure on the entire IT pack. Infosys at one point in time was down approximately 15%. Right now, it is down about 10.1% as we speak. And it's just not Infosys, it's TCS, HCL Tech, Persistent, LTI, Mindtree, Wipro, as well as Coforge, you name it. All of these IT companies are under pressure on back of what Infosys reported a dismal quarterly earnings coming in for that particular counter that's triggering brokerage downgrades as well. But let's talk about a bright spot as well in today's trading session. That definitely has to be ITC. ITC has notched a fresh record high in today's trading session. So you have ITC, that's one of the top winners in trade today. 401 is where the stock is at currently. Take a look at what are the banking counters doing in today's trading session, because banking sector has just turned positive right now, trading flat with a positive bias. So take a look at what you had what the PSU banking names doing right now. SBI, PNB, as well as Bank of Baroda, all of them holding on to good gains. Added to that list, even IOB is holding on to good gains. But yes, IT sector cannot take your eyes off from that. I'm sure a lot of the stocks will feature in Market Fatafat today.
Absolutely, I'm sure about that. But on that note, let's get started with all the stocks then that are buzzing in trade. And on the technicals today, we have Samit Chauhan joining with us from Angel Broking, while from the research team, we have Ashesha as well as Harsh joining in with us. A very good afternoon to all three of y'all and a happy Monday to all of y'all. Let me start with the first stock then, and Precision Chem Shafts. That's the stock that we're going to talk about. This one is buzzing in trade. It's up almost 11-12% in trade last time when I checked. Now 15% uptick, day's highest point as of now. And why is this stock buzzing in trade? Is that we're seeing a ace investor Vijay Kedia's name has actually started appearing in the shareholding of the company as on March 2023. Now this is the Jan to March update that has come in. So Vijay Kedia's name has come into this stock and he's bought around % of stake in the company. He's bought 10 lakh shares. That's according to the shareholding that we're seeing coming in. However, in the shareholding pattern of the company in October to December 2022, Vijay Kedia's name did not appear. So it is assumed that he's bought all these shares between Jan to March 2023. That's 10 lakh shares. Q4 FY23 is what he's bought all these shares in. And post this, shareholding announcement coming in and the release coming in on the BSE, we're seeing that the stock is buzzing in trade. It's trading almost at a 3-month high as of now as well. 122 is what the stock is trading at, Cheryl.
All right, let's shift focus then and let's talk about Adani Green. And this particular counter is into focus in today's trading session because of the operational capacity or operational update that they had given for FY23. As you can see, the operational capacity has risen by about 49% on a year-on-year basis for Adani Green, and that basically lent a good support to the stock. At one point in time, you had Adani Green counter that was higher by about 3% or so. Right now, it has given up some of those gains, but nevertheless trading with good gains of about 1.6% as we speak. And this is on back of the operational performance for the year gone by.
Okay, let's move on and then talk about RBL Bank. Samit, on the charts, how is this one looking like? We're seeing a sharp run-up in the stock today. And before this, it had been a bit of a dull move for RBL Bank. Is this any sort of an indication of a better move that we could be expecting from RBL Bank now?
It looks like, this stock has been a laggard, and, it is known for its deceptive nature. But the kind of, base building that, we observed 3 weeks back around 200-day average, which is placed around 130. And stock started moving upwards gradually. But today, it has the prices have literally taken off, and the kind of velocity that we are witnessing along with the volume activity, it suggests that from here on this stock is likely to move northward. Next levels to watch out for would be around 160 is the first level, and the next swing high is placed somewhere around 170. So we expect this outperformance to continue. Stocks looks quite promising at current juncture. Any dip would be a good buying opportunity, and as a trader, one can keep a stop loss at 146 and expect a first target of 160, and then probably extension towards 169.70 cannot be ruled out.
All right, moving on then, and like I mentioned, Infosys, that's the stock of the day, and we will have this one feature on the show. So Ashesha, take us through what's exactly happening with Infosys. We know there's a slew of downgrades coming in for this one.
Absolutely. It is clearly the stock of the day. It has recovered a tad bit from the lowest point of the day, but despite that, it is holding on with cuts of over 10%. Dollar revenue for the quarter gone by saw a decline of 2.3%. Numbers across the board were below what the street was working with. It has also missed its FY23 full year guidance, and FY24 guidance is also quite muted. As far as management commentary is concerned, that is also quite cautious. They say they are seeing some stabilization in the March quarter, but the environment is pretty uncertain. We have seen a whole host of brokerage downgrades that have come in across the board. Nomura has downgraded to neutral from buy. They've cut their target price to 1290 from their earlier target price of 1660 rupees per share. Credit Suisse, meanwhile, has also downgraded the stock to neutral, and their revised target price stands at 1250 rupees per share. Apart from that, Jefferies has also maintained a buy, but they've cut their target price to 1570 from their earlier target price of 1770 rupees per share. So weak set of numbers, cautious management commentary, and slew of downgrades from brokerages is why the stock is under pressure today.
Absolutely, a slew of downgrades that have come in. But Cheryl, we also spoke to a lot of analysts and experts to understand the smoothest slide that has overall come in the IT space as well. And we have names like Girish Pai, we have Apurva Prasad, as well as Ravi Menon, who gave their view overall on it, as well as the IT pack. Let's go cross and listen into that.
You will get a modest positive return, but it may not be a great return. That's my view. So my own take is that Infi will probably have to come off by maybe like a 20% number for you to make, say, a teen kind of growth.
In terms of challenges, I would say maybe a Tech Mahindra because of higher, exposure to a communications vertical. And that is a vertical where both TCS and Infosys have cautioned. So purely from that standpoint, and because there is a transition which is happening at the leadership level, that could, show some kind of stress. We also expect some sequential decline in case of.
This is a great opportunity with our digital transformation. We see double-digit growth being possible over the next 3 to 5 years. This particular quarter, clients have taken a knee-jerk reaction, I think, because of IT uncertainty that happened with the SUV collapse. And so in Europe, we've seen there were concerns that a large bank could fail. So with all that, people had just put a pause on capex, but we think that will return. It's just a matter of time. Maybe a few months later, we should see that come back. And structurally, we think we are on good growth trajectory.
And that's the word coming in from a lot of analysts on Infosys. But let's move on, Harsh, and let's talk about VRL Logistics and why is this one in focus today?
Well, Cheryl, they've announced a capacity addition that's coming through for the company. Existing capacity around 5,700 vehicles is what they have. They're going to add another 1,600 to 1,700 vehicles, 1,667 to be absolutely precise, buying Ashok Leyland and Tata Motors in terms of the companies from where they're going to be buying their vehicles from. In terms of the capex itself, around 697 crore worth of capex in FY24 has been announced. Of course, some of it was already announced in the past, orders have already been placed, but this is the full FY24 guidance that they've come out and given. The mode of financing largely is going to be mixed, internal accruals as well as vehicle financing from banks. They're going to be doing both of that. And of course, this also takes care of some of the vehicle scrapping policy which the government is implementing currently, and this kind of takes care of some of those issues as well. So a couple of reasons why the stock is in the news, but the stock is actually down 1% in trade.
Okay, keeping an eye out on VRL Logistics on the back of those news flows. But Samit, coming to you, Indigo, Interglobe Aviation, how should we be viewing the charts for this one? Is it finally time to buy this one, and could we expect a sharp run-up going forward?
So this stock has been consolidating of late after a sharp correction from the levels of 2180 odd levels. Stock seems to have cemented its position somewhere around 1800 1850, where multiple key moving averages also coincides. And today we are seeing good traction since morning. This stock is attracting a good buying interest, and it's on the verge of a breakout from its near-term hurdle of 1950. So we remain upbeat and we expect this stock heading towards the 2000 mark. So as a trader, one can buy at current level. Any dip towards 1920, 1910 would make it a good risk to reward candidate. As a trader, one should keep a stop loss at 1880 and expect a target of 2000 or maybe 2015. Probably next couple of weeks time.
Okay, 2015 for short-term traders. You can watch out for that level as well. Let's move on and talk about KIOCL Limited. This stock is in focus because the company has received 2 mineral exploration projects in Karnataka, and the reconnaissance survey of polymetallic mineralization in gold is something that is what will be happening in other district that they're saying they've got it at around 1.48 crores, and preliminary this is going to be the exploration and amalgamated Kalaburagi limestone blocks in Jivaragi region, which is at around 2.33 crores. So overall it's a smaller deal, but yes, still on the back of this we are seeing KIOCL Limited is in focus. It's up 16% as we talk.
All right, let's shift focus and let's talk about Havells. Definitely the heat is pretty much on when it comes to the weather conditions, Samit, not only in the markets but also otherwise. But Havells on the charts, do you think that it is going to see some cooling effect right now, or do you see it actually spike higher just like the heat in the city of Mumbai?
See, I think it is likely to add. Overall, if you see, stock has been consolidating. It has been struggling to surpass 200-day simple moving average, placed around 2030. But the kind of price and volume activity that we are observing since morning, so it suggests that this time this stock would surpass this hurdle and move towards 1280, 1300 kind of zone. So overall, the chart structure looks promising and important. The kind of volume activity that we are seeing, it suggests that the breakout is imminent in coming days. So overall, one should trade with a positive bias. 1180, 1140 should now act as a very strong support for Havells.
All right, moving on, let's talk about TVS Sri Chakra, and this particular counter is in focus. It was trading higher by approximately 3% last time when I checked this particular counter. Right now, given up all of those gains, trading with gains of about 9% as we speak. The company on Friday said that its brand TVS Euro Grip has forayed into superbike and adventure touring tire segment. And on back of that particular development, you can see the stock that started the trade higher, about 3%. From there, now giving up gains, but nevertheless, this is the reason why TVS Sri Chakra is in focus today.
Okay, let's move on and talk about HDFC Bank, another nifty company which reported its numbers over the weekend. How are they looking like, Ashesha, and what's the stock doing?
Well, yes, the numbers were largely in line with what the street was working with. In fact, net interest margins, net interest income has seen an uptick of nearly 24% on a year-on-year basis. Operating profit, meanwhile, stood at 18,621 crores, an uptick of 14% on a year-on-year basis. We have several brokerage reports that have come in on HDFC Bank. First up, Investec. They've maintained their hold rating on the stock with the target price being raised from 1690 earlier to 1720 now. They say merger-related concerns continue to remain unaddressed, and hence for now they're maintaining their hold stance on the stock. CLSA meanwhile says that inline NII but PPOP miss was due to operating expenditure this quarter, but they believe that risk-reward is evenly placed for HDFC Bank. Kotak meanwhile has maintained its buy rating on the stock and gone ahead and increased their target price to 1925 from their earlier target price of 1800 rupees per share. They say recent merger continues to be a near-term headwind for the stock. Apart from this, remember that the board of directors have also approved issuance of perpetual debt instruments to the tune of 50,000 crore rupees. This will be done via private placement basis over the next 12-year period. Results is prima facie the reason the stock is in focus today.
All right, moving on, Samit, let's talk about the banking names, but this time you'll be talking about PSU bank name, that is SBI. How is it looking on the charts to you?
See, SBI is clearly bucking the trend today, and it was clearly needed the kind of sentiments that we had since morning, courtesy to Infosys sharp correction. But overall, if you see, this stock has been gradually moving higher. Today, we are seeing good traction. Stock is now approaching its important cluster of resistance placed around 550. So we expect at least stock to move towards 550 in next probably couple of days time, but it would be a daunting task for this particular counter to surpass this hurdle. So whether it will surpass this level or not, that time will tell. But as of now, from here on, at least another couple of percent move is clearly on card. So momentum traders, yes, definitely can buy at current level. 534 is the stop loss, and can expect a move towards 550 in next couple of days time.
Keep an eye on those levels for SBI. Moving on, Harsh, Jubilant and Gravia. Why have you picked out this stock today? What's the news for you?
Well, expansion plans, Vinny, they've disclosed today that they're going to be expanding their, or rather commissioning a new global scale acetic anhydride plant at its manufacturing facility in West India, Bharuch, Gujarat. So on the back of that, expansion plans coming through for the company. In fact, the stock is up 0.5% as well in trade today. This plant adds around 60,000 metric ton capacity for Jubilant in Gravia, and of course the annual acetic anhydride capacity is now taken over to 210,000 MT post this expansion. So this enhanced capacity will help the company increase its global presence in various geographies and of course achieve a leadership position as well. So on the back of all of that, the stock as well as the company is in focus, and the stock is up 0.5% plus.
All right, moving on, let's talk about United Spirits Summit. The stock is doing absolutely nothing in today's trading session, but it's not only today. Over the last 1 year, the stock has actually not given great returns. Where do you see United Spirits going ahead from here on? Do you think it will come out of that consolidatory or downtrend phase and actually move higher going ahead?
See, we are anticipating it to happen. The kind of chart structure that we are observing on, a higher degree time frame chart, it seems that the stock is in a consolidation mode, but it is more of a bottom formation that is clearly in process somewhere around 720 and 780 kind of zone. A couple of days back, we had a good traction on this counter. Stock was on the verge of a breakout, but it didn't happen. Overall, stock is challenging its important level of 765, 770, but soon we would expect this stock to come out of its long slumber phase and head towards 800 or beyond levels. So we are anticipating this breakout to happen in the near term. We would anticipate this, and as a trader, one can keep a stop loss somewhere around 740, and sooner or later, once the breakout happens, we could see the stock hastening towards 800, 820 levels.
Keep an eye out on United Spirits. Let's move on and talk about Mrs. Bector's Food now. This stock is in focus because we are seeing Aquarius has actually initiated coverage on this one with a long rating, a target price of 705 rupees per share. They believe the biscuit business for the company, the distribution-led initiatives as well as the premiumization over here is something that will be aiding the growth for the company. In terms of the bakery business, they expect to see growth over there from strength to strength as well. So both the businesses, biscuits as well as bakery, they're expecting strong growths over there, and they expect the margin expansion to take place as well. Sales, they're expecting a CAGR growth of around 24% from FY22 to FY25 expectations. Profits expected to see a 30% CAGR growth in the next 3 years as well, and EBIT also a 29% CAGR growth in the next 3 years. So they're quite bullish on this one. 705 is what their target price is, and we've seen that the stock is buzzing in trade, up almost 1.5%.
All right, let's talk about Tata Steel, Samit, a large cap player in the metal space. But yes, the performance has not been quite supportive for Tata Steel given the size that it is. Where is this one headed now on the charts to you? Do you think that if you are holding Tata Steel, right, it makes sense to stay put with this holding?
Yes, broader degree structure still remains quite sturdy. The stock has already formed a good base around 100, 102. And in last couple of weeks, we have already seen a gradual move towards 108, 109. Yes, on a short-term chart, 108.9 seems to be a very strong resistance. But overall, the price structure is quite promising. It has already surpassed its 20-day moving average and has been sustaining above that since last 3 days. So overall, 106, 104 seems to be a sacrosanct support for Tata Steel. And once the breakout happens beyond 109, we could see a good traction in overall metal counters, and this stock can then head towards 112, 114.
All right, let's shift focus. Let's talk about LN Electronics, and this particular counter at one point in time saw an uptick of approximately over 4%, taking the stock price to about 139 rupees per share. Right now, it's given up all of those gains. At one point in time, it was at a 2-week high. They approved the company said that they have approved the launch of various products, including fans, AC motor, mixer grinder, juicer as well, and electric sterilizer in the near term. Fact that the company was looking to expand its portfolio. The stock saw a good spike at open, but from there on, it's fizzled out all of those gains, now barely trading in the positive territory. That's LN Electronics for you.
Yeah, let's move on. And Samit, you picked out one more of these summer stocks name, and that is Voltas. How are you looking at the charts for this one? Similar trends to Havells or maybe a different one?
We can see early signs of revival in Voltas. Broadly speaking, this stock has completed its 61.8% retracement and has been, cementing its positions around 800, 820. Today, since morning, we are seeing good traction in this counter. The volume activity has picked up substantially. So, once the breakout happens beyond 840, we could see this stock, resuming its upward trend. And then probably 870, 880, these are the next levels to watch out for. So, overall, from a risk to reward point of view, this stock looks quite, promising at current level. 810 seems to be a strong base, and once the breakout happens beyond 840, 880 is clearly on cards.
Okay, that's Voltas for you. That, according to Samit, looks good at current levels. But Ashesha, moving on, let's talk about Zydus Life Sciences. Why is this one in focus today?
This counter is in focus because the company has received US FDA approval for a drug. Now, this particular injection is used to prevent cardiac arrest. The company says that the drug will be manufactured at company's injectable manufacturing facility in Vadodara, Gujarat. This injection has annual sales ability of potential of about 28.5 million US dollars in the United States. And the company has also said that it has a total of 363 approvals now. Over 440 ANDAs since the time of filing for US FDA approvals. So, in the back of this news that has come in and the fact that the company has received US FDA approval for a drug, the stock is in focus today. It's not doing much, absolutely flat as we speak.
Let's move on and talk about Redington India. Harsh, why is this one in focus? Actually, it's falling in trade today. What's the reason behind this?
Well, yes, more news from Apple. They continue to open stores, but really nothing new per se. They're all set to open 2 new stores, one in Bombay, one in Delhi. And Redington, of course, being a major supplier of Apple products, distributor of Apple products, beg your pardon, will obviously be impacted by that move. And on the back of that, of course, the stock has been under pressure since almost the start of trade, down 2.5% as we speak as well.
All right, moving on, let's talk about Monte Carlo. And this particular counter actually saw an uptick as much as 4% on an intraday basis, taking the stock to their highest level January 12th. Right now, the stock is trading higher by about 2.6%. The company has reported the highest ever jump of about 36% year-on-year basis in their sales for the March quarter. And if the gains actually hold on for the stock is on track for gaining for a 4th consecutive session, which is already trading above the 50 and 100 DMA level. So that's Monte Carlo for you. After reporting highest ever jump of 36% on a year-on-year basis in the quarter gone by in their sales, the stock is seeing good strength in today's trading session.
Okay, and on that note, we are going to slip into a very short break, viewers. Don't go anywhere. We'll be back with more stocks after this break.